finance, a la shmup. What is advance refunding and pre-funding? Advance refunding is basically just where the issue of one bond, a new one, pays off the debts of the old one. The issuing city, in the case of a muni bond, or a corporation, if that's the issuer, in the case of a normal corporate bond, is just borrowing from Peter to pay Paul. You want to buy a shiny Bugatti on credit, it costs a cool $3,000 a month or $36,000 a year. How can you be sure you can afford to make those payments, which are more than you pay for rent? Well, luckily you have a kindly, loving and ill grandmama who gives you 3 G's a month in allowance. Well, she's essentially advancing you the dough that you'll then, advance refund to the Bugatti dealership each month. In bond land, specifically muni bond land, advance pre-funding works the same way, but with bonds, not cars. With safe bonds, or bonds where an administrator is worried about the cash actually getting to the people for whom it was intended, a pre-funding feature can ensure that money gets there. The sewer bills are coming. They're coming. The brand new one the city had built, it's a doozy. It's a beautiful thing with neon lights and desmellifiers and all that good stuff. You're going to issue bonds against them, against future sewer receipts for your city. And yeah, we know it'd really stink if you couldn't pay off those sewer loans and they had to repossess the sewer. When a bond is issued, a chunk of money is tucked away safely in a nice escrow account with a bank or trust company. Literally, it's a company you pay to be able to trust them, so that the odds of the money actually being there for a distribution or a call provision are high. The city knows it's going to get big bills for the construction of the sewer system. It just hasn't gotten the final bill from the contractor. Bills are coming, so they pre-fund them. So those advances are extra netting under the financial high wire. And what happens if a government issues bonds and then runs a little short when it's time to pay up? Well, one option is to issue a new bond to pay off the outstanding bond, meaning a past due bond. Yeah, not great. Well, that's called advance refunding, and it buys the issuer a little extra time in paying off their debt, or a little extra time to, head for the border.